أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. So we are a little bit ahead of schedule, so we'll take it easy. We're going to start chapter 12, but we're going to talk about it just a little bit and not go through the full class period. And inshallah, we hope to finish by the middle of next week. And then if we do, then we can start our spring break one day early and take Thursday off if we finish, inshallah. So let's jump right into it. What we have next is the auditing of the human resources. And what we are going to cover today are the client side of the story, which is the objective of the human resources process, the accounts that are affected, and the tasks, the documents, and the records that the client handles. So what is the goal of the human resources process? It's to hire employees, to train them, to evaluate their performance, to counsel them, to promote them, to compensate them, and to take remedial actions. So the client's human resources department does the following. They hire the employees. They train them after they're hired. They evaluate their performance after the employee has worked for a period of time, and after that periodically. And then they counsel the employees on their performance, on their behavior, on many different issues. They give them advice, and then promotes the employee. The human resources department promotes the employees for good performance. And then compensation, which is paying the employees, also is done by this human resources process. And then taking remedial actions. Remedial actions are actions taken to discipline the employees if they have done something wrong, or if they have unproductive behavior, etc., etc. So all of this is part of the human resources process. Our concern, the independent external auditor's main concerns are as follows. First, payment to the employees. So are the payments made to the employees who are working? Is it for the days and the hours they have worked? Is it calculated accurately? Is it paid timely? Is everything authorized, etc., etc., etc.? So we are concerned about all of that. And then we are also concerned about accruals related to payrolls. Accruals are payables that are related to the payroll, such as salaries payable, taxes payable, benefits payable. Benefits are those things that are paid on behalf of the employee to someone else, perhaps, for example, airline tickets, health insurance, etc., etc. So the payables are recorded for all of those, and we are worried that they may not be recorded on time, they may not be recorded correctly. So we are worried about that, because that will make the financial statements untrue and unfair. So let's start. What are the accounts that are affected by the payroll transactions? Obviously cash, right? You have to pay the employees cash. We'll come back to the second one, which is inventory. The third one is direct and indirect labor. Direct labor and indirect labor. Direct labor are those people that physically touch the production, right? People who make the product, their payment is direct, considered direct labor cost. And indirect labor costs are those that the indirect laborers are those people who are in the factory, but they don't physically touch the making of the product. For example, the supervisor, the security guard in the factory, the cleaner, those people. So this is all the direct and the indirect labor costs are part of the manufacturing costs, right? The payment of the people who are in the sales and administration, right? Theirs is different. They are not even in the manufacturing cost. Okay, theirs are administrative costs. And then we have various payroll liabilities and expenses. Payroll liabilities such as salaries payable, payroll tax payable, benefits payable, and expenses such as salaries expense, tax expense, benefit expense. There are benefits that are paid for the employees to other people, or they could be paid to the employee themselves, right? For example, reimbursement for school tuition fees for the children of the employee, right? So this is a benefit. So these are all expenses, and if they're not paid uh, when they're accrued, then there is a payable, right? There is a payable. Now my question is, how is inventory affected because of payroll? Who can answer that question? No idea. How many different types of inventory do you have in manufacturing environment? What are the three types of inventory? Raw material, then work in process. What is included in the work in process inventory? What is added to the work in process inventory? Because work in process inventory is going towards cost of goods manufactured, right? So what is included in the work in process inventory? When you have work in process inventory, you add raw material to that, plus what? What else do you add to the raw materials for it to become work in process inventory? What type of labor? Direct and indirect, right? So the cost of goods manufactured, which is the end result of the finished goods, is made up of direct labor, direct material, indirect material, and overhead, right? So payroll costs actually affect the cost of your inventory, does it not? Is that clear? Are you following how? All right, very good. The accrued payroll liability transactions include cash and accrual. So when you have the recording of the payroll, you debit payroll expense and you credit payroll payable. When you pay, you debit payroll payable and you credit cash, right? So the accrued involves cash and accruals. Accruals are payables, basically. Accrued taxes means taxes payable. Accrued pension cost means pension payable. Now, remember, this pension calculation could be really complicated depending on the company rules. For example, at Qatar University, the rule is an employee or a professor who's working for the university would get, at the end of the service, 1 month's salary for every year he or she worked. So let's say somebody works here 5 years, they would be paid a pension or a uh, end of service gratuity of 5 months salary. But this amount is going to be based on the salary at the time the employee is leaving the university, right? So let's say the employee is working for the university during the first year. At the end of the first year, let's say the monthly salary is 10,000, the payable would be 10,000. At the end of second year, let's say the salary is 11,000, the payable is going to be 11 times 2, right? 22. So this has to be adjusted every time, right? At the end of third year, let's say it's 15,000. That means it would be 15 times 3. So every year this has to be adjusted based on the contract with the employee, and you can understand how this could be very complicated to calculate, and this could be in millions of reals. We're not talking about one or two employees, we're talking about hundreds of employees, right? Are you following? Are you following how this could be uh, very complicated calculation, right? So we have to see as an auditor that this calculation is done accurately, because the payable must be recorded correctly. It's a payroll, it's a payable, it's a liability which should be recorded correctly, right? The payables or the accruals that are related to the human resources or payroll process are as follows. Uh, the other companies, the question here is, do other companies follow similar policies as QU? Every company has different pension and retirement policies, right? So, for example, I interviewed at a university one time. Their policy was that if you work for the university for 25 years, then once you retire, you will get 75% of your salary until you live. So let's say you were making $10,000 per month, right? When you retired, then you would get $7,500 per month as long as you live. And then after you pass away, your husband or your wife, right, your spouse would get that money until he or she lives. So that's their policy. So you can see how complicated that payable could be, because you don't know how long the person is going to live. You don't know how long the spouse is going to live. So there are calculations based on how the average age of the people, the health condition. So it could be very complicated depending on the policy. Are you following? So different companies have different policies, all right? And add to that, the salary is going to be the last 10 years average. So whatever the last 10 years average salary was, right, it would be based on that. So maybe somebody was head of the department during the last 10 years, right, 5 of the last 10 years, and the salary was more. So it would be averaged out. So it could be very, very complicated depending on, there is a specialization on employee benefits, right? And it's not my specialization, but we had in our firm a entire an entire office full of accountants, an entire location where all the accountants were experts in employee benefits calculation and employee benefits expenses and payables, right? So, it could be very, very complicated, right? Does that make sense? Do you follow? And again, there's no way, you can learn all of that, and you may not even learn, in your career, the details of such calculations, because you will become an expert in something, and then the other things you'll just have an idea about. You cannot be an expert in everything, okay? All right. So common payroll related accruals are wages and salaries, for example. Wages are hourly payments, and salaries are fixed. Monthly or annual salaries are fixed. Wages are based on number of hours worked. So these are payables recorded at the end of the period, end of the pay period. Payroll taxes, again, are paid to the government on behalf of the employees. In some countries, the company also has to pay some payroll taxes. Bonuses, you can understand. Commissions are paid to usually salespeople for selling. So, for example, if somebody sells a Land Cruiser, the company might have a policy that the company pays 1,000 reals for every time an employee sells a Land Cruiser. So those are commissions, right, that are paid. And this is not just for cars. It could be for electronics. It could be for computers, washing machine, uh, television, other things as well. And then the last one is benefits. Benefits are paid to the employee or to someone on behalf of the employee. For example, vacation pay. When the employee is not working on vacation, the employee could continue to get salary, so that's a benefit. Sick pay, if the employee is sick, for example. This is very common right now. People are quarantined for 2 weeks and they cannot work, right? So they're paid because of the sickness that they have during the time they're sick. And then we have pension, which is paid once the employee retires, right? There's a question on commission. Commission is paid based on sales. So if an employee is able to sell to the customer, right? So in certain products where the customer comes and the customer has questions, so you have to show the customer around, like electronics and cars and big ticket items. So if you are able to sell it to the customer, if you're able to convince the customer to buy, then the company pays you a commission based on what you have sold, right? So you might see sometimes when you go to the supermarket, the uh, salesperson is trying to convince you to buy a particular brand, even if the price of the brand is lower than the one that you are looking at. The reason is not because they love you and they want you to have the best product, but because they are going to make a higher commission if you buy that particular product. Has it ever happened to you? Has it ever happened to you where the salesperson is trying to convince you to buy a new product, a new item, a new brand of computer, and you're not interested? The price may be lower than the Dell or the IBM you're looking at, right? So because they're paid a commission based on that. Is that clear, Jasim? Okay. Now we go to the next, which is the tasks performed by the client's different departments, the documents used in those tasks. The formatting is a little bit unaligned, but we will work with this, inshallah. The first is the Department of Human Resources. Their job is to hire and fire, right? Hire the employees when they come and join the company and fire them when they leave the company. And the document used are personnel records. The personnel records have the biographic data, the bio data of the employees, every single one who works for the company. And every single employee has something called a master file. Master file. Have you heard this before? What is a master file? The master file has what type of data? Permanent data. Very good. Data that does not change regularly. The name, the address, the phone number, the position, the salary. Some of these data could change, but they don't change regularly. For example, the address of the employee could change, right? But some of the data that never changes, for example, the date of birth, right? So the personnel records have data about the employees, and they're created when the employee is hired, and they're used throughout the duration of the employee's service with the company. The next task is setting the salaries. So when the employees are hired or when they are promoted, the salaries are set, and there is a salary authorization form that is used to set the salary, which goes through proper authorization for setting the salary of a new employee or an employee who was promoted. The next is deduction. Deductions are those things that are taken away from the payment to the employee, and this could be voluntary, this could be involuntary. For example, if the employee is making, for example, in the US $10,000, then the taxes could be 2,000, for example, $2,000 of taxes, which could be deducted from the 10,000, right? So it is called a deduction. The employee could choose voluntarily to contribute more money towards the retirement. So let's say the employee wants $1,000 from the salary taken out and added to his retirement plan. So in that case, the employee would have to authorize that, and there is an authorization form which is signed by the employee saying that I want every month $1,000 taken out of my uh, monthly payment, monthly salary, and added to my retirement plan. So this authorization is needed for the deduction, right? The second step, the second department is the supervision, or the second task is supervision, which is done by the employee's department that the employee is working at. So it could be the finance department, it could be the production department, it could be the marketing department. They are responsible for keeping track of the attendance, and it's done through time cards. So time cards keep track of when the employee came in and when the employee left daily. And this time card used to be a physical card before, which was punched in a machine, but now it's electronic. So when the employee comes in, the employee puts his or her finger in the sensor that's at the gate, and the system registers the employee's attendance. And when the employee leaves, they again put their finger on the sensor, and it again registers their end of the work for that day. So have you seen this machine? We have it in Qatar University. There are other places that have that. Al Ahli Hospital, for example. Have you seen a machine like that where the employees punch their finger? Have you seen? Yeah. So it is done automatically. The second here is scheduling, which is done by the supervision, the supervising department. So wherever the employee is working, the schedule is done especially for those who work shifts. For example, doctors and nurses and other people, security guards, they have scheduling. So they're either given morning shift, night shift, evening shift. So the scheduling is done by the department where the employee is working. And then the productivity is kept track of by the same people, the supervision. How many, for example, for doctors, how many patients they have seen. For accountants, let's say how many tax returns they have prepared, etc., etc. The different types of productivity measures are used by the department where the employee is working. Okay. The third is timekeeping uh, department, and their job is to do timekeeping, and what they use is timesheet. Now I will get a question sometimes, what is the difference between a time card and a timesheet? The timesheet is prepared for the entire pay period, where the time card is for daily in and out. So the time card keeps track of when the employee came in today and when the employee left. The timesheet would have all the number of hours or shifts or days the employee has worked in a pay period. The pay period is the time for which the employee is paid, and most common pay period is monthly. In Qatar, most people are paid monthly. But there are other uh, time periods for pay periods for which the employees could get paid. For example, bi-weekly, every 2 weeks, or weekly, right? So there could be time periods, pay periods that are less than a month. And the timesheet shows how many days or hours or shifts an employee worked during the pay period, right? So that the salary or the wage is calculated based on those numbers of hours or shifts or days. Is that clear? The difference between timesheet and time card. Is that clear? Okay. Then we have the payroll processing. The payroll processing includes calculating gross and net pay. Calculating gross and net pay. Gross pay is the total amount the employee's salary is supposed to be, and net pay is after the deduction. So there could be tax deductions, there could be pension deductions, there could be other types of deductions, and the net pay is what the employee is going to get paid. Let me show you an example of Sharat has a question, that is, timesheet shows hours alone, and time card show the hours and time of joining and leaving each day. Time card is a daily concept. Timesheet is a period concept. So what data is included in there depends on the format the company is using. So there is no particular format. The timesheet could be detailed as well, but it shows data of the amount of work done in a pay period. Okay. So this is an example, for example, of a gross and net pay. You can see here the wages and salary here in the first box is $88,571. This is annual. The federal income tax, this is a deduction. It's 5,800. Social security tax, it's 5,900. So these are deductions, right? This gross and these deductions would be used to calculate the net pay. So the deductions would be subtracted from the gross and the net pay would be calculated, right? So this is an example, and you can see how many different deductions. You can see how complicated this form is. This is generated for every single employee, right? This is a real example. This is a real payroll form, right? This is called a W-2 in the US. This is used for every single employee. So the payroll processing uses this to calculate the gross pay and the net pay. All right. We have two different documents here. One is the payroll register. Whenever you have something that has the word register after it, what does that mean? Register, list. Very good. List, right? List. So register means list. Payroll register is a list of everyone who's getting paid in the pay period. So remember these terms. Pay period is the time for which they're getting paid. Payroll register is the list of all of those people who are getting paid with how much they're getting paid. Okay, that's payroll register. And then there is payroll master file, which we discussed just a couple of minutes back, that there is a payroll master file for every single employee, which has the permanent data based on which the payroll is calculated. Is that clear? And then we have number 5, disbursement, which is the payment to the employee. It could be done with a check, right? Cash is not paid usually. And then it could also be done through direct deposit, right? So there could be a direct deposit record, right? There could be a direct deposit record that shows how much the employee was paid through a bank transfer. And then we have, lastly, the general ledger, which accumulates all the expenses and payables. And from there, the payroll reports and tax reports are prepared. What payroll reports are prepared depends on what the company, the management of the company wants. It could be, for example, a direct labor report, an overtime report, any type of report, an absence report that the management wants. And then the tax report is prepared to send to the government, and again, whatever the government requires. And there could be many different types of reports. When I worked in the US about 8 years as an accountant, we used to do these tax reports that could be uh, generated monthly, quarterly, semi-annually, annually. So there are a lot of work. There are a lot of reports, a lot of work to be done to prepare these reports, and there could be a lot of complication in these calculations. So this is part of the general ledger accountant's job to do these reports. Okay. So we will stop here, inshallah, and we'll continue from here. We'll take it easy a little bit during these last 2 weeks before the spring break. Do you have any questions on what we discussed? The quiz on chapter 11 is next Tuesday, so prepare for that. And if you have any questions, you can ask me. The videos are available for you to watch again. And inshallah, I will see you on Thursday. Okay? Assalamu alaikum wa rahmatullahi wa barakatuh.